I'm speaking from my office this week, so I can look at my screen and I can see all that markets dropping in real time. Let me just give you the rundown on what we're seeing. You're seeing the oil prices are down sharply. US WTI on the futures is trading around $57 a barrel. I don't know when was the last time it traded that low, but it was quite some time ago. Treasuries are dropping. That means treasury yields are going up. Let's put that in perspective. When the market started getting really soggy last week, we saw that 10-year treasury yield go all the way down to like 3.9%. Right now we're over 4.4%. So over the last 4 or 5 days, when the stock market has been dropping like the dickens, treasury yields have been going up, and that is perplexing because normally when you have volatility in the equity market, you have a flight to quality, to the safety of US treasuries. Treasury prices go up and yields go down. So there's a lot of nervousness going on in the market right now on why is the treasury market behaving that way, and there's really no clear explanation. There's rumors about a Japanese bank selling. You can hear rumors, oh, the Chinese are selling, but it could just be market forces. There's something we don't understand about what's going on in the long-term treasury market that's kind of pushing up yields, making people reluctant to lock in yields at this point. We'll learn more about it, but frankly, let me click here so I can see how much. So the Dow futures are down 693 points as I'm talking here. I believe if the S&P is down almost 2%. I believe if the U.S. stocks finish that way today, meaning that the futures market now predicts what the market's going to do later on in the U.S. today, I think that means that the U.S. market will be officially in a bear market. So we have that benchmark, or whatever you want to call it, milestone is the word I was looking for, that might occur, that we're actually in an official bear market at the end of today. Okay, so I've kind of given the rundown. The last thing I wanted to hit is that gold is up, but it's still trading. It's up pretty sharply, but it's still in the range it's been for the last week. And the reason I kind of wanted to point that out is, for instance, if the Chinese were really selling US treasuries, they would have to do something with the dollars. Some of those dollars would wind up in gold, and gold would be up a lot more than it is now. So that's why I kind of discount the Chinese selling things. So let's go to the proximate cause of this sell-off. The proximate cause is, of course, Trump's tariffs. So how's that going to work out? Well, why does it keep getting worse is because the market kind of didn't expect Trump to make the tariffs so high. He didn't expect the tariffs to be calculated in such a weird way. And they didn't expect the rhetoric to be, oh, we want to see a more balanced trade relationship with all these countries. That's normally not what you hear in trade discussions, because normally discussions are all about trade barrier. The other country drops its trade barriers and you're happy. At least your product has an opportunity to go in there and be sold. But if you make your make your end goal that somehow the country has to go on making it easy for your products to be available in their country, and actually have to find some way to either buy more of your stuff or sell less of your stuff to you, that's very, very difficult. It's kind of almost impossible. So if you kind of took Trump's current rhetoric at face value, those tariffs could be around for years and years. And that's why the market is getting particularly nervous, because we don't want such high tariffs going on for years and years. There's a tremendous amount of supply chain disruption that's going to have. It's going to devastate company earnings, or maybe that's a little bit overstated, but it's going to hurt company earnings. It makes sense for the stock market to be in a bear market based on that. And especially, like I said, given that even in the bear market, stocks are just sort of moving towards fair value. They're not cheap at all right now. They'd have to drop quite a bit before people would start saying that US equities are cheap. So is that worst case scenario going to happen? Well, let's just talk about the different political scenarios we have. if this keeps up the way it is, Trump's got to have a rebellion in his own Republican Party. The power to give tariffs are in the hands of the House and the Senate. They've delegated emergency powers that they've been doing that since the 1990s to the president. So Trump is probably within his rights to initiate these tariffs. But if they want to, they could take that power back to them. But then they would have to undo their previous law, which is a new law. And in order to do a new law, that gives the President of the United States the right to veto it. So if they passed a new law, the president would need to veto it, would likely veto it, and they would have to override the veto. Given that the Democrats would be all in favor of doing this, you know, to get the necessary majority or supermajority you need to override a veto, you would need about a third of the Republicans to go along with this. So this scenario, which I'm probably talking about a little bit longer than I should, because right now it's in that far-fetched range. I mean, things will have to get a lot worse. Things will have to go on a lot longer before you had 1/3 of the Republicans in the House of Representatives turn against Trump. You got to remember, you know, still, I think at this point, Donald Trump is a more popular politician than most Republican congressmen. So they'd be very reluctant to go against him. But at a certain point, you know, they'll do it, right? If it gets bad enough, they'll do it. So now let's just say, okay, does Team Trump really believe their own rhetoric? Are they really waiting for the U.S.? Are they really expecting to hold these tariffs there until U.S. trade deficits with these other countries get better? I just can't believe anybody would be that crazy. I believe that Trump is playing hardball. He wants to get trade deals done. It's not clear what he wants, so that's creating a lot of nervousness. But he clearly wants more than just these companies saying they're taking down their trade barrier. So he's looking for commitments for them to buy X, Y, and Z from them. So what do I expect to see from the market? You know, let's kind of take a look at it broadly. For most of my career, with a couple of exceptions, you know, whenever you have a bear market, if you just go in and buy it, you turn out all right. Probably the only big exception to that, and it goes right fairly quickly. Probably the only big exception to that would be 2008, when the market sold off so violently. So a lot of you probably can remember you know, the criticism of CNBC's Jim Cramer, who was like honking his buy, buy, buy thing as the market was selling off. And of course, anyone who followed him, the market dropped a lot more. As they always say, you know, your 401k became a 201k. But anyhow, what I'm saying is, even in that situation where Cramer kind of gave bad advice way too soon, bought too early, dropped a lot more, a couple of years later, people were glad they had bought. They didn't really mind the fact that they bought too soon because everything turned out all right. So first thing you have to look at is you don't want to be scared of the market when it's dropping. Normally the smart people buy when it's dropping. The current backdrop right now does look a little bit scary because there's so much imponderables. But what you have to remember is that if you don't buy when it's scary, you're not going to get much buying done, because all it takes is Trump to announce, hey, we've got a trade agreement with another country. Then the template for how to end these tariffs appear, and then everyone's going to assume other countries are going to follow that tariff, get deals done with Trump. The tariffs are going to start coming down. The market's going to explode higher because it basically has already dropped so much. So that's where we stand right now.